I'm not sort of a very political person, so I'm not going to speak particularly about freedom and responsibility, which is the theme of the meeting here. But I will actually talk a little bit about the things that I work on a daily basis, which happens to be the Russian economy. And you have to sort of take what I say with your Russian grain of salt and realize that this is what an outsider can think of when it comes to the Russian economy. And I'm a macroeconomist, so I look at sort of the big picture. I don't know all the details of all the regions, all the companies, all the people, etc. I can give you sort of a big, broad macro overview of what I think is going on in Russia, what some of the challenges are, and also what are the opportunities that we can quite easily identify in Russia. But of course, I'm also a Swedish economist. I've been working, I worked for the IMF in Washington for almost 10 years before coming back to Stockholm in 2006. So, I mean, if you want to also discuss what's going on in Europe or what's going on in Sweden, I would be happy to discuss these issues with you as well, of course. So, I mean, I'm just giving you this intro of my outsider's view of Russia, but feel free to sort of ask whatever you think can be of interest or relevant to you. And welcome to Lena. And she has already heard me talking so many times, so she knows that she can be a bit late, actually, so that's fine. All right. I'm not only an economist, I'm also a little bit into marketing. So I'm just going to tell you in 2 slides what we're actually doing at the Stockholm Institute of Transition Economics, and also tell you about the network that we are involved in the region in terms of economics institutions, in terms of research and education in this region, because we're not only doing things here in Stockholm. So SITE is a relatively small research institute at the Stockholm School of Economics, and here you can see some of the researchers at the school, and they work on a lot of different topics that we think could be of interest to transition countries. So as economists, we can be macro people, we can look at energy markets, we can work on how you deal with corruption, how you build institutions, a lot of different things that we think are actually of interest to what we at least used to call transition economies. I mean, today, a lot of people would actually take offense if you say you're a transition economy, and they would say, we already transitioned, so that's all in the past. But, you know, let's keep that maybe outdated label to understand countries that went from the planned system towards a market economy. But anyway, so we cover quite a broad range of issues, and I show you this also because all of these people are there at site and would be happy to interact with all of you if you're working on issues that are relevant to what they are actually doing. So, I mean, feel free to get in touch with my colleagues at the Institute if you're interested in that. The other piece of marketing is that we have been part of helping to establish and develop a number of research institutes that are also into economics education in the region. So we have colleagues in Moscow, in Riga, in Minsk, in Kiev, in Stettin, in Tbilisi, and ourselves in Stockholm. And basically in all of these places, they do research, policy advice, and some type of economics education. So again, if you're sort of going to these places or want to know something about these places, we have colleagues in all of these countries. What is perhaps even more accessible to all of you, since you're all online all the time, is that we publish together free policy briefs. And you can see the web address there, which is basically sort of 3 or 4 page policy-oriented summaries of the research that people do in the network. usually focused on the countries in this region. So I think that could also potentially be of interest to you, depending on what areas you're working on. This is what it actually looks like if you want to focus in on economics and oil. And in this particular picture, what is important is that we're looking at the black line, which is the international oil price, and it's an index here just to keep it simple, so you can compare it for a longer time period. So the black line is an index of international oil prices, and the red bars, that's GDP per capita measured in US dollar terms for Russia. Okay? This is a pretty good picture of how important oil actually is for Russian incomes, especially when you measure it in US dollars. We could have measured this in ruble terms, in nominal ruble terms. We could have measured it in real ruble terms, and the picture would be a bit different. But really, when you want to show the most extreme correlation between international oil prices and Russian income, you should use sort of US dollars, because then you also get the changes in the exchange rate that is part of this picture. If you're a Russian policymaker and you want to make it look less dramatic, you would actually instead plot the real ruble income, because it's not that strong a correlation. It's still very strong, but this is sort of the extreme version. And I'm giving you the extreme version here just to sort of make a point. But again, it doesn't really tell us quantitatively how deep is Russia's love with oil. And since I'm an economist, I also use statistics and run regressions. And I'm not going to get into all of the details, but you can run a proper regression on Russia's GDP growth, on changes in international oil prices. So how much the oil price increases or decreases, how much does the Russian economy go up and down? And what is extremely striking here is that we can take a number of different measures of Russian GDP per capita, both in ruble terms and in dollar terms. And we run this regression for the last 25 years. And we can see that the changes in international oil price explains, on average between these different income measures, 2/3 of Russia's GDP growth. So 2/3 of Russia's GDP growth comes from an external factor that Russian policymakers cannot actually affect themselves. Okay? So when people say, but you know, the Russian oil and gas sector is maybe only 10% of Russia's production, this cannot be true. But believe me, this is true at the macro level. And the reason is, of course, that the income that comes from outside when you sell your oil and gas on the international market, that is also then a driver of private consumption, investment, government expenditure, and many other things in the Russian economy, which is why such a relatively small sector of the Russian economy can have such a large impact on the macro level. And at the end of the day, it's sort of this macro picture that really affects the household's income levels in Russia. So, you know, we can think ourselves, if this picture, if during this 25-year period, oil prices had not increased, where would Russian incomes have been today? You know, that's really the question we have to think about. We could also think about how popular would the current leadership have been if oil prices had not increased by sort of 4 or 5 times during some of these time periods. So that's extremely important. And as I write in this picture, you know, having I have one variable, which is changes in international oil prices, that explains between 2/3 and 80–90% of Russian GDP growth. that would qualify as one of the world's simplest macro models that does an extremely good job in explaining past GDP growth. So we can explain the history of GDP growth with this one variable. So that's an extremely simple macro model, and it's actually extremely accurate or telling us about the past. Okay, what is the problem here if you're a Russian policymaker? The problem is that the lower chart here is showing you the forecast of international oil prices in the next couple of years. I've just taken this chart from one of the IMF reports, but the general point here is just that if you look at the blue parts of the chart, it shows you how uncertainty about future oil prices increases with time. So when the oil price is maybe around 40, when the red line is around 40, that's the center of the forecast. The confidence interval goes from somewhere like $20 per barrel up to over $100 per barrel. You know, if you're a Russian Minister of Finance, the difference between $20 per barrel or $100 or $120 per barrel is basically, do I keep my job or am I fired or even in prison? You know, so you know, that's how important this is. And this is basically also generating overall income growth for all of you here that differs from GDP falling by 10% to GDP growing by 10%. You know, so this is enormously important at the macro level in Russia. And I mean, if you want to be more specific about it and say, well, if I want to make a forecast of Russian GDP growth 1 year from now, and I know that I have to deal with this uncertainty in oil price forecast, the thing is that I can explain basically of the errors I make when I make forecast errors for GDP growth. Over 80% of those errors are explained by the fact that I cannot predict oil prices. That's extremely important. So, and we have to realize that this type of uncertainty is something that the governor of the central bank has to deal with. This is something that the Minister of Finance has to deal with. This is the Minister of Economy, and basically all of the political leadership. They have to think about strategies. How do we sort of manage when this is the uncertainty that we're facing? Okay, so from this, it's maybe easy to say Russia would have been much better without its oil. I mean, some people make that claim, and we can have a long argument about is this true or not. One way of looking at it is comparing what actually happened in Russia with different sort of countries that we think started from similar positions. In this picture, I basically plotted Russia is the red line here, which is actually the highest line here. And then I plotted two countries. If we took the growth rate of Lithuania or Poland, and we started where Russia started, and just compared it to where Russia is, you can see that the red line, which is actual Russia income level, is still quite some way ahead of Lithuania and Poland, which we would in general call relatively successful EU countries, right? But what you can also see in the Russia chart is that you have an enormous amount of ups and downs in the red curve compared to the other curve. So, but basically over this 25-year period, Russia has benefited from oil, but have had much more volatility in its growth than these sort of EU member countries. We can also do the same comparison. A lot of people talk about the BRIC countries, so we can make the same comparison to the BRIC countries. And again, we can see that Russia is actually doing fairly well. Just at the very end of this chart, we can see that China, it would have been sort of better for you if your growth rate would have been China rather than actual Russia. But again, I mean, Russia has actually been doing fairly well with its oil, but the point here is that you get a lot of volatility on the ride, and you can see at the end, the curve has had a dramatic drop, as we all know. So then, to me, it's more a matter then of how would you actually want to manage the oil and the uncertainty that comes with oil money. Being an old IMF person, I would say that the exchange rate management is extremely important. And we can see that this chart is from 2014. It starts in 2014 and is basically until today. So in the past, I think you all remember that sort of the ruble US dollar exchange rate was pretty much stable. And everyone said that, we cannot change the exchange rate. That would ruin credibility. People would be upset because they have savings in dollars, etc. And when we all had the global crisis in 2008 and 9, Russian policymakers for quite some time tried to keep the exchange rate fixed as it was before. But in a pretty short time span, the central bank lost around $300 billion US defending that exchange rate, and that was not sustainable. The nice thing this time around since 2014 is that they learned their lesson, and they basically let the ruble exchange rate depreciate pretty much exactly in tandem with the decline in international oil prices. So if you look here, the black line is international oil prices, the green line is the exchange rate. So you see that they follow each other almost to the minute here. And what you get, the red curve here, is then instead oil price in ruble terms, which is a much more stable curve than you saw the oil price in US dollars from before. So anyway, this is actually a very important and I would say successful part of managing the volatility that you get from being so oil dependent. I know that some people in Russia have been extremely angry with this kind of management, but I can tell you as a macroeconomist, if the central bank would not have done this, your economy would be in so much trouble today that none of us would probably be even here today. That's how serious that would have been. The other part of managing, the uncertainty with oil income is to build up the fiscal funds. And Russia was starting to build up fiscal funds, which was extremely useful in terms of macroeconomic management. And this chart starts in 2007 over there, and then it goes basically till the beginning of this year. And all of you know that you have two parts of your fiscal funds. One is the reserve fund, which is the blue part, which is supposed to take care of fluctuation in oil prices to support the budget. And the wealth fund, the sort of orange-red looking thing, is supposed to safeguard your future pensions. The not so good thing here is that the blue part of this fund is basically at the end now. So the government will have to think about different ways of generating revenues for the budget or making big budget cuts. And this is something most politicians would like to avoid. And if I may guess, I think at some stage you will see some of the wealth fund also being used to protect sort of the fiscal balance. But let's see. Okay, so I would say overall, though, that over the last couple of years, given the extreme situation that the Russian government had to deal with, they have actually been doing quite well in terms of macroeconomic management. The decline in incomes and GDP could have been much greater if they had not sort of become a little bit more modern in their thinking. So that was sort of a good grade for macro management, I think, in Russia. But I think if we want to look ahead, I mean, what is it that most outsiders, and probably most of you here also, think about, which is how are you actually going to deal with a future where hydrocarbons are being phased out in different countries? I mean, I'm probably too old to see hydrocarbons sort of being completely phased out in my lifetime, but I mean, some of you are young enough that most likely within your lifetime, we will be running all of the cars here in Stockholm on solar or water or wind or some other energy source that is not hydrocarbons. And this is, of course, what the whole world is talking about in terms of global warming. And I have to admire your president for being able to, in the same speech in Istanbul, saying that the hydrocarbon era is coming to an end. And he basically says that it's not coming to an end. And a little bit later he says that mankind is moving towards green energy. You know, I don't know how that actually fits in the same speech, but you know, this is the difficulty he has to deal with. I mean, maybe the hydrocarbon era is not coming to an end in his lifetime or in my lifetime, but certainly we know our kids are not going to live in a hydrocarbon era. And now I did something that I wasn't supposed to do. Okay. Oh, you don't see that on your... I think it says that it's going to close down in a short time period, but anyway. All right. What should you be doing instead? All right. Different countries have different strategies for generating their wealth or their incomes and providing sort of prosperity to their people. I'm showing you here a chart where the figures are a bit outdated, but the point is still very valid. This is a World Bank study from early 2000 something. And they tried to actually look at different countries and see what kind of assets the different countries have. So one asset class is subsoil wealth, which is basically oil, gas, minerals, all the stuff that you dig out of the ground. And then they were saying, okay, if we look at all of these things and we try to put the value on them, and then we take that value for the whole country and divide it up on all of its citizens, we get to a number. And this is the subsoil wealth on your left here. And you can see our lucky neighbors, the Norwegians. If you take their oil and divide it up among the population, they basically have $100,000 of wealth each. Okay? I'm very sorry to say that we let the Norwegians have their independence early 1900s, but that's life. Russia in this chart, you can see, Russia is relatively lucky. It's not like the Norwegians because you're many more than the Norwegians and you have lots of oil and gas, but you're so many to share it.
And better management.
Yeah, well, let's not be so generous to the Norwegians now, okay? No, but Russia has subsoil wealth of maybe $25,000 per person. So you're all quite rich in this room, I guess, all the Russians here. I'm a poor Swede. Our bar is not even visible in this diagram. I'm a sad case here. But then the World Bank also measures different types of wealth. So if you look at the right side, it says intangible wealth. This is the wealth that you can't really show someone or touch or feel, you know. But it's things like institutions. It's things like human capital. It's sort of your inventions, your R&D, ideas, all that fluffy stuff that we think is important, but we don't really know what it is. Okay. But they can also give us an estimate on what that is worth, given how large our GDP is, okay? So as economists, we can basically still come up with a number despite the fact that we can't see or touch it. We can still give it a value, okay? And if you look at that value, intangible wealth in Sweden, in UK, and some other countries is actually $500,000 per person, okay? $500,000 per person, intangible wealth. So the fluffy stuff that we cannot see, the World Bank says that the poor Swedes that have no oil or gas, we actually have fluffy stuff that's worth 500,000 per capita. So again, I mean, this makes me feel a bit better. The thing that's not so good if you're from Russia is that your bar is down there. And it's actually, again, in the order of $25,000 per capita, which is basically the same amount you had in terms of oil and gas and mineral wealth. But, you know, if you add those two things up, that would mean that your wealth stock is about $50,000 if you take these two things. If you add up the Swedish stock here, it's 500,000. You know, so for a modern economy today, it's much, much more valuable to have this fluffy stuff that we don't really see or can touch than having all of these oil and gas and minerals. It doesn't mean that the oil and gas and mineral is not worth something. It certainly is. But it's just that if you can invent sort of iPhones or internet and things like that, that's going to be worth even more actually today. So this is sort of the challenge, I think, for Russia, that you can do much more in terms of generating intangible wealth. I know all of the Russians that I meet, they're equally smart or smarter than any of my Swedish friends. I mean, I cannot see any reason why this would not be the case. But you also have to build institutions and all of the other things that makes it possible for all of you to actually utilize all the human capital that you have. So this is where we come to a comparison what some of these fluffy things are, the institutions. And this is what I think is a bit closer to what you're discussing here, which is what are the needs for reforms that we can easily identify in Russia. And some of the fluffy things can be thought of as public administration, rule of law, or controlling corruption. And these are just some of the indicators that are put together by also the World Bank, where they do this for different countries. And sort of the blue and yellow bars, that's how they rate Swedish public administration, rule of law, and corruption. And sort of the little Russian flags are how they rank the Russian equal institutions. So you see, this is basically what creates the gap in the last chart, intangible wealth between Sweden and Russia. It's not that Swedes are smarter in any way, but the institutions that we have and can use to produce things are actually quite dramatically at the higher level. My point is that I think Russia could greatly benefit for reforming some of these areas that I showed here. But I also think that Russia would benefit greatly from actually thinking about who they want to collaborate with to modernize their economy and increasing the share of in sort of intangible wealth in your wealth stock. And for all of the talk and all of the sanctions and all of the discussions with the EU, the matter is that the EU is still by far the largest trading partner with Russia. The EU is also by far the largest investor in Russia. And I also had a couple of slides showing you the Swedish connections in terms of trade and investment with Russia. But it's a pretty simple point. I think that still today, Europe, including Sweden, would be the natural partner for Russia in terms of developing the economy further, in terms of actually doing something and increasing that intangible wealth bar and not just sort of digging out stuff from the ground and exporting. And the question is, how how can we make that change happen? And I think we all know that this is going to be a political decision, but I would still think that for the foreseeable future, turning Russia's attention towards Asia or China may be useful, but forgetting about the EU and Sweden and the partners you have in Europe would be actually a huge mistake. So I'm hoping that in a not too distant future, we will see a change of politics that would actually allow Russia to realize its full economic potential, which I don't think the country is doing today. All right, I'll stop here, and whatever questions about Russia or Sweden or the EU you want to address, I'm happy to do that.